Hello and welcome to the first in a series of conversations on the subject of mergers and acquisitions being presented by the San Diego corporate law firm of George P. Shenas Incorporated. I'm George Shenas, and it's my privilege today to host this first conversation with David Duval, who is our guest for the day. How are you,
George?
David?
Terrific, thank you.
By way of background, Dave has an extensive background in corporate finance. He spent the first 8 years of his business life with the New York Stock Exchange, where he was a member and an institutional floor broker. After taking a break in Colorado, he moved to San Diego, where he's developed an investment banking practice at Claiborne Advisors, where he serves as the CEO. Claiborne's located in Del Mar, California. Claiborne focuses on the representation of San Diego company transactions that are just under the Wall Street minimum levels. Thank you for joining us again, Dave. It's my pleasure to bring, as the introductory session, your perspective to this as an investment banker. A lot of companies, as we both know, are struggling to survive, let alone capitalize on their sale potential. Have we gotten ahead of ourselves a little bit with respect to this topic?
I don't think so, because it all depends upon the needs of the company owner to sell or not sell in this market. And if they want to sell later, now's a good time to start teeing their company up for that process. The principles that would underlie a sale today would basically be the same as they would in much better times, and they would apply whether people wanted to sell or raise growth financing. But in this time where everybody's under stress, the economy is down, there are other things that you'd add into it also in terms of battening down the hatches and making sure you survive. Cash is king, and it's a good time to get rid of any fat in the company, to do some fresh looks at budgeting, maybe some cutbacks, considering outsourcing, things that you might not look as hard at in good times.
So basically, as part of the preparation process, you're not only gathering together data, if you will, and preparing yourself from that perspective, but you're also looking at trimming your sails, so to speak, better understanding your company, defining your company more specifically, and making adjustments in your operations to be able to clarify who you are when you go out to the marketplace.
Now, most of the time when clients come to me, they come and they say, well, I want to sell. I want to sell now.
Yeah.
If, however, I can get them 2 or 3 years ahead of time, it's a great opportunity to tee up the company to significantly enhance the value before we get into the process.
Do you go through an educational process with your clients? I mean, how do you engage them at that level?
I do a lot. I will do a fair amount of that myself. I also refer a number of them into a pro bono mentoring group that I'm part of called the Chairman's Roundtable. And we will look at a broad range of issues that are specific to that company that might involve adding or cutting back product lines, might involve expansion into another state, outsourcing manufacturing into China or not, or whatever. And the idea is to prepare the company in a way that will enhance its value in the eyes of the market. Another thing they can do in advance of a potential sale is to start running the company like a real company and not a family enterprise, because the the value that you can create if you start doing things the way real companies, big companies, public companies operate will really enhance the value of a private company.
What kind of problems do you run into in trying to transition a company from, I won't call it a mom and pop operation, but a family run operation to a more sophisticated sort of approach to running a business?
First off, probably having them define what their value proposition is for their customers. A lot of people haven't thought about that. And by value proposition, what I mean is, what does their product or service bring to their customers to either save their customers money or increase their customers' revenue? And they should be able to tell that story in very few sentences. We call it an elevator speech.
Right.
For the obvious reasons.
Yeah.
And that's probably the number one item that is difficult to do, because a lot of people can't tell you about their company in fewer than 8 or 9 minutes.
Do you, as you move a company through these preparatory stages before they move into a more active sales effort, do you try to get them to identify for you, or do you work with them to identify some of the risk elements that can impact the value of that company to a prospective buyer?
Absolutely. I would say that some of those would include the level of accounting and financial reporting that they do.
Mm-hmm.
I have seen companies where when I ask them for their financials, they give me their tax returns.
Right.
And they haven't looked at a financial statement.
Mm-hmm.
They have been running the company to save on taxes. They haven't been running the company to enhance the value to an outside investor.
In many cases, that might be complete opposite poles in terms of
That's right.
prepping your company.
And that's why if a company has been run in the normal family-oriented fashion, it helps to have a long run-up before you take them out to the market, so that you can get them to change. You can get them to begin thinking about cutting back on the perks that they take out of the company. Because you'll find that when you go to sell and you want to add those back into income, the sellers won't get full value for those add backs that they will if they haven't taken them out to begin with.
Mm-hmm. Recast financial, if you can actually have a historical financial that shows the cutbacks before you ever hit the ground with the sales effort, you're better off, is what you say.
The better your historical financials look, actual historical financials, the better, the more believable they are.
Yeah.
And if you can back those up with reviewed statements from a CPA firm, rarely do I see anybody that has or needs audited statements, but a review is a good place to start.
Right.
And I like to see reviews that have a management letter.
Mm-hmm.
And if you have those going for a couple of years, that's a good thing to do.
Dave, we have a lot more to cover on this important subject, but I'm going to stop at this point, and we'll continue in another session shortly.
Fine.